Hey guys, Boris Losberg. Welcome to our weekly Forex Technicals. Comm Dollars give some back for the week of 2/17/2/23. Past performance not indicative of future results. Trading Forex carries high level risk and may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding trading such leveraged products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of the risk associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information, including commentary trade ideas provided by Forex.com, should not be relied upon as substitutes to research, which should be performed before making investment decisions. Forex LLC and Forex.com merely providing this information for your general information. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their own unique situation before making investment decisions. They should tailor the trade size and leverage of their trading to their personal risk appetite. Forex LLC will not be responsible for any loss incurred investments made by readers and clients as a result of any information contained in Forex LLC. We do not render investment tax or other professional advice, and if investment legal tax or other professional advice is needed, seek advice of a competent professional. Well, let's take a look at the Comm Dollars today, because usually we're always looking at the key majors, but I think the story in the Comm Dollars is kind of very interesting. As Friday basically progressed, we all drifted lower and lower and lower. Aussie did not take out the week's lows, but it was a definitely a weaker close, as 103.50 definitely failed. Primarily, this was the reason, I think, because gold prices got crushed as the week continued. But if you look at this on a longer time basis, if you look at the dailies, let's say on a 6-month basis, you're definitely seeing the 103.50, which used to be former support, now becoming pretty concrete resistance, and that's a negative development for Aussie. If he can't clear 103.50, we're now going to go back down to the test of 102.50. 102.50 test break here definitely opens up the possibility to 101, possibly even parity, as really 101.50 is sort of the first level of support, and then ultimately parity as the major bearish case against the Aussie really starts to take place. So at this point, this rejection kind of looks very, very negative. Unless we come back, retake it, hold the 103.50, which would remount a potential challenge to 104.50. Obviously, the look on the Aussie looks kind of bleak here, and looks like it's a further downward path on that trade. Similarly, the other interesting trade in the Comm Dollar complex, in my opinion, is the dollar CAD. The reason why dollar CAD is interesting is because it's not been as weak as some of the other Comm Dollars lately. It's definitely held its the very, very long-term range of 98.50 to 101.50. But if you look out a little longer, if we go back out to, let's say, even a year, this 101 level, or basically this level over here, yeah, 10, 103. Let's just say 101.25 for argument's sake. This level here, a break here, really puts the dollar CAD in a completely different path trajectory. This is a major breakout if it comes out, because this has been resistance for a while here. And if it takes out the 101.25, it looks like it would really run all the way up to 103.50, perhaps even all the way up to 105. Again, major reconfigurement in dollar CAD, which has been essentially under parity for a very, very long time, now is holding above parity. And to me, the key breakout tell for dollar CAD weakening further, or dollar CAD strengthening, CAD weakening, would be a close above the 101.25, somewhere in that region. Would definitely a signal to us that there's potential for further upside in that particular pair. Kiwi, on the other hand, of course, has been the strongest of the Comm Dollars, but even Kiwi kind of faded as Friday occurred. We took out the 85s, came back down. Kiwi, on a relative basis, still maintains a better position than all the other Comm Dollars, but of course that could change. And I think the interesting thing with the Kiwi right now is the fact that you got rejected here at the 85 level. If we have further continuation here, to me, a very weak construct in the Kiwi would be a break of this 83.50. If that's given, that would really suggest a pretty major top in place, and then we're going right back to the lower end of the ranges at 81.50s. So all the Comm Dollars look relatively weak as we start the week, and approaching key turn points, especially with dollar CAD approaching, in my opinion, the strongest key turn point, and dollar Aussie as well at 102.50 on dollar Aussie, 101.25 on dollar CAD as really, really important points. Now back to the majors. Euro still struggling very much underneath the 34 level, although the impressive thing for the longs, if you I want to take some solace. There's definitely the impressive thing is this 33.50 so far has held, and more importantly, the 33 has held. So 33.50 is a very, very critical corridor here. A break here below 33s really does open up a much more negative trade all the way down to the 130-100s in the euro. A hold here sets up another potential retest of 3,500, which is which is obviously the key the resistance level that kind of failed over here before. And it looks like it could be very much of a churn trade if it does come back up. So euro at a interesting structure here, but does not give us a tell signal until this 3,300 is broken, or we retake the 34s, and then the picture becomes a lot more constructive, and you could possibly make an argument that yeah, we're going to run back up to 35s. Although I still think when you're looking at the euro on a longer term basis, it is a sell the rally trade. So one of the more interesting things here to consider is if it does make it to above 34.50, 3400s, is to fade the momentum and try to sell the rally on the assumption that it's going to fail, for the near term. So that's an interesting look. Cable is funny. It looks like it's desperately wants to make some sort of a bottom. It tested the 5400s, 5500s, excuse me, but did not break the 5450s. Got bought up, but still very, very weak. Cable also, of course, making a whole series of lower lows with these anemic rallies back behind it. But this bottom, it depends if it sort of holds for a little while, may have a potential to retake back up to 56s, and of course 57 now is the big resistance level, just like 58 used to be. It's kind of a step resistance every time we go down lower, and cable would have to rebuild tremendously in order to really recapture a positive structure. But on a possible short-term trade momentum, yes, you could make the case that as long as it holds 54.50, the potential for 56 and 57 is definitely possible here. And then lastly, dollar yen. Now, dollar yen over the weekend, we have news that G20 basically is not going to do anything about currencies. That may push it, which is why you're seeing dollar yen here trading kind of well into the New York close, ran up, sort of backed off 93.50 level, but ran up through 93.50, 93.70 as a matter of fact. Still, this 94.50 is the major operating principle of resistance. I think it's going to have a relatively difficult time clearing that for the near term, but for the time being, it looks like it wants to target that, and dollar yen may be a trade to the upside. Conversely, the second break, we've had one break around 92.50, second break around 92.50. Third break may be the charm. If we come back, return all the way up to 92.50 and break again, third may be the charm, and that could set in a pretty serious, especially if it comes in off of these levels. In other words, it would make a lower high and come back down and break 92.50. That would make a very, very strong distribution top, and that would signal further the distribution in dollar yen, perhaps down to 91.50, perhaps even down to 90.50 in the near term as profit taking really kicks in. So have to watch this very, very carefully. I still think the balance of risks is difficult to clear 94.50, and the possibility of a correction still exists, although for the near term, the data definitely looks positive for dollar yen as we enter the new week. So that's pretty much how the week shapes up. Wishing you guys the best of luck and the best of trading, and I will see you in the New York Traders Expo this weekend, and of course on Twitter all week long. The Sport Schlossberg, BK Forex, over and out.